Hello to all traders watching. My name is Pedro Souza and I am a FX harmonic trader. Today I'm going to be talking about a very important subject for all traders: money and risk management. I'll try to sum it up nicely for you, but there's quite a few things that we need to go through. First of all, I'm going to show you an example of a potential trade so you can visualize where the entry should be, what kind of target profit we're looking at, where the stop loss is, and in order for you to understand that one of the most important aspects of trading is the risk to reward. You want to lose small and win big. So you can see there's a potential trade. You can see the entry, the sell, the sell entry. You can see, and then where the profit goal should be. Now you see the size of the stop and you see the size of the reward. This would be at least 1 to 3 risk to reward. This is the kind of trade that you want to get in. This is the kind of entry that you're looking for, because this absolutely maximizes your chances of being profitable on the long run. It is very important when you set up your trades, you can see a reward that is much bigger than the risk that you are taking. It is important to manage your risk effectively, keeping your losses small and your profits as big as possible. You do that by sticking to the size of your stop loss. You don't move the stop loss, you honor the stop loss, and you stick as well to your target profits. If before you place the trade you have planned for it, you should stick to what your plan is. If your risk to reward was 1 to 2 or 1 to 3, you want to stick to that. You don't want to change. Okay? I'll explain to you in a minute why this is so important. Consistency is one of the most important aspects of trading. So by keeping the same variables, you're keeping the same stop loss, you're keeping the same target profit and the position size as well, you are skewing the probabilities in your favor. Now let's see why that is like that. You look at the example of a normal distribution, such as the throw of the dice game. You can see straight away, even without being a mathematician or a statistician, that the probability of getting the numbers in the middle is higher than the numbers on the edges, on the tails of the curve. If you assume that trading will have a normal distribution of results where your losses and wins are distributed over a curve, but you stick to the same risk to reward, what happens is you go through a series of losses and you will lose, in this example, $1,000 on each trade, amounting to 5,000. And then the wins are 3 times bigger. You make 15,000. So you win 15,000, you lost 5,000, you turn up a profit of 10,000. And that is because you are skewing the probabilities in your favor. Stick to the same variables, you expect a normal distribution, even if you don't have an edge and your win to loss ratio is not 6 to 4, it could be even 3 to 7, and you can still turn a profit if you use the risk reward in your favor. Remember, when you're going through a series of losses, you need to have a sound money management to withstand the time where the market is not going in your favor. Maybe the market conditions change, maybe the market is ranging and your strategy is more for training markets. That will make a difference. You have to adapt. No, the market is not going to adapt to you, you have to adapt to the market. Now, to stay in the long run, if you look at this table, you see that if you're risking 1% per trade, it's going to take the market 100 times to prove you wrong before wiping out your account completely. If you stay for the long run, The market is not going to stay in conditions that are not favorable to your particular type of trading. But your account has to survive in order to get to that stage. The name of the game is preserving your capital. Staying in the long run, you'll have many more chances to trade and many better opportunities. This is all I've got for you today in this short video. There'll be more videos coming up. Keep following us on our Discord channel, and I'll see you next time. Bye.